Welcome back to watching the newsroom. Market in fine fettle. HiTech Pipes is the stock in focus. In fact, Anish Bansal, CEO of the company, is joining us now to talk more about business. Anish, afternoon. Thanks so much for your time. Talk to us about what kind of capacity utilization are you operating at right now, and are you looking at any capacity additions this year?
Good afternoon, Mr. Sharma. First of all, thanks so much for inviting me on the show. So at HiTech Pipes Limited, our capacity utilization for the H1 was around 50%, 70% being the optimum utilization capacity across our sector. So due to the COVID impact and the monsoon impact, it was 50%. But for H2, the company is on its way to achieve beyond 65% for the rest of the year.
I understand that you're also in the process of putting new galvanizing lines and coloring coating lines, prickling line, etc. Talk to us about what is the stage, what stage is that project in, when that would be completed and will start contributing to the overall numbers?
Yes, the company is foraying into the roofing segment, which includes the galvanized roofing sheets and the color-coated roofing sheets. The trial productions have already started at our Secunderabad facility in UP, and we hope to achieve commercial production by November of current financial year. And slowly and steadily, this segment will contribute significantly in terms of value addition and the margin profile of the company.
So analysts who track your company are estimating anywhere between 600 to 700 crore additional revenue potential from this line in 12 months far out once you start commercial production fully. Is that a fair estimate, or what's your internal target set for this segment?
So we expect a net revenue in excess of 500 crores from this business, and this will be done over the next 2 financial years.
What are your plans in heavy duty structures and sonic structures? What kind of potential does that segment hold for you?
So as we are seeing a lot of demand from the infrastructure space and new age projects, new age products coming into the country, so the company has decided to to focus on this area, and we'll be launching many innovative and new age building products for the construction and infrastructure industry. So right now we have about 3 or 4 products which are scheduled for launch in next quarter, and we'll be slowly and steadily we'll be catering to these markets. And down the line, we expect a lot of potential from these areas.
So, if I see that you're taking a lot of initiatives as a company for new products development, new lines of revenues, if one were to talk beyond the absolute near term, say 2 to 3 year far out, what kind of revenue and volume targets have you set for yourself once all these new lines also start contributing meaningfully?
So our internal target is to achieve a volume growth of at least 20% year on year. Once we are over with these pandemic challenges, the company is well on its way to achieve 20% volume growth. The company has added a new manufacturing facility at Maharashtra in Khopoli, and we are expecting a lot of revenue boost from that project as well.
Will it be fair to estimate that you can double your revenue turnover in the next 3 years?
Yes. We can assume so.
Right. What about margins? What kind of margin levers do you have? Because I see that new lines of revenues are also at higher margins. So this will take your blended margins to what levels, say, in next 3 years?
So in our industry, the margins are calculated by the way of EBITDA per ton. So last year, the company's EBITDA per ton was around 2,800 rupees per ton, and this financial year, the company is aiming to achieve a 3,400 to 3,500 rupees EBITDA per ton, and this will be increasingly, it will increase gradually over next 2 to 3 years with the addition of new capacities and with the increase of value-added products in the total product basket.
Right. Leave us with your broad picture thoughts for the company when you discuss with the board, because I know you guys are pioneers in several areas and segments, but then challenges came and kind of a bit of consolidation sideways track. But now I understand that the company is wanting to claw back the market share lost, and there's a renewed vigor in the company. So what broad ballpark targets have you set for the next 5 years?
So over last 4 to 5 years, the company has grown aggressively. We have added four new greenfield manufacturing plants across various parts of the country, from north to west to south. And now, with all these facilities being set, the company's combined capacity today stands at 580,000 tons. And our vision and aim is to take this capacity to 1 million tons in next 3 to 4 years. And with the volume addition, the company is also focused on the value addition as well, increasing the profitability of the company through various new innovative products, and increase the operational efficiencies and improve the financial efficiencies also. So down the line, our major capex has been done, and next 2 to 3 years, the all the capacity addition would be brownfield, which will require relatively very less capital. And we are poised to be among the top three steel tube and pipe producers across the country.
Right. All right, Anish, we'll let you go on that one. Congrats and best wishes for that journey. With that, it's a wrap on the show. Thanks very much for watching. Goodbye.